Steve, what are we hearing that's being said? Of course, we've seen all sorts of, reaction, cartoons and commentary in state media.
Look, I mean, China is going to take advantage of this and also point to the hypocrisy coming from the White House in Washington, D.C., as, you know, of course, the storming of the Capitol is likened to what happened here in Hong Kong. So they're saying there's hypocrisy and double standards. You're going to get this from state media, especially the commentators on state media, whether it's the People's Daily, the China Daily, or the Global Times. Listen, you know, Western democracies are an open book. You see the good and the bad and warts and all. And China will take advantage. They'll pick and choose what they want to highlight to their people and show that the communist system of governance is far superior to a decaying democracy. And that is the overall theme. I am paraphrasing, of course, but even President Xi Jinping earlier this week on Monday was quoted in state media saying, "Time and the situation are on China's side. This is where our determination and confidence are coming from." The People's Daily, after the storming of the Capitol building, said the U.S. has to now swallow its own bitter fruit. And state media commentators and social media as well of late, the last couple of days, have been weighing in quite heavily on President Trump's banning, or the banning of Donald Trump from Twitter and other social media platforms, as a cautionary tale of how these social media platforms wield too much power. These comments coming at a time, of course, when the anti-monopoly law is being enforced in China, and some say that people like the titans of tech in China, big tech, is being knocked down a peg or two by Chinese authorities, who also want to see the power of social media knocked down.
Well, another big U.S.-China story. What's happening with Alibaba and Tencent in the United States? Are they going to be blacklisted?
Well, what we're hearing from numerous media reports, including the Dow Jones Newswires, is that the U.S. is expected to continue to allow Americans to invest in the three big bat companies, Baidu, Alibaba, and Tencent, and that they will not necessarily be put on the president's blacklist. Dow Jones reporting the Trump administration no longer plans to add those three companies to the Defense Department's list of companies deemed to be supportive of China's military. 9 other companies, though, according to Dow Jones, will be added. Also, Bloomberg News just last week did report that Alibaba and Tencent were left off a similar list from the Treasury Department of companies that are linked to a military in China. Now, a ban of the so-called bat companies obviously would be one of the most dramatic escalations yet by the outgoing president, given the sheer size of the firms and the difficulty unwinding the positions in the U.S. and here in Hong Kong. You know, combined market value of their primary listings of just Alibaba and Tencent alone are well over $1 trillion, nearly twice the size of Spain's stock market. And 2 firms alone account for about 11% of the MSCI Emerging Markets Benchmark Index. So right now, it looks as though they're not going to be part of the ban. But it is offering lots of caution to investors who are perhaps thinking about that big $8 billion or up to $8 billion offshore bond issuance that Alibaba was likely to have launched as early as this week. Investors are saying all the uncertainties surrounding Alibaba, whether it was the possible blacklisting in the United States, possible delisting, that's a little bit of a far-fetched scenario, but definitely because of the uncertainty surrounding Jack Ma, is maybe causing some investors in the bond market to take pause.